In this video, we're going to go over the hot stock that has absolutely exploded in 2020 and is expected to continue to grow at a massive rate in 2021. And this company is called Bilibili, and they are the closest thing to a YouTube platform within China. They are expanding at a massive rate. Top line revenue is growing tremendously year over year, and this company has seen amazing share price growth, and that growth is not expected to slow down anytime soon. Bilibili trades on the Nasdaq under ticker BILI for around that $72 price point. This is a video and entertainment platform based within China that has seen tremendous user growth, and the share price is up more than 320% this year. They are known to be the closest form of video entertainment, similar to what YouTube is within the United States. But China's market has been developing very fast. They have a lot of a younger generation, and this platform, Bilibili, targets Gen Zs, which makes up more than 300 million people within the Chinese market. So this company has a lot of room to continue to expand. Their numbers, their user base, and their time spent on the platform have been growing month over month. And in this video, we're going to go over this company because this may have the potential to double or triple over the next year as the overall market continues to expand. And Bilibili has some major backers. Some of the largest tech firms in the world are investors and own a significant stake in this company. So there's a lot of strong future growth potential, and we're going to break all that down in today's video. If you're new to the channel, everyone, I am the Gen Z Investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell within your own portfolios, and of course, we discuss major stock market news and headlines, and we're going to go over this high growth company that's expected to explode in 2021, which is Bilibili. Over the past 4 years, Bilibili has done a great job of expanding their monthly active users. Back in 2017, the company averaged 72 million people on their platform each month, but now in 2020, it has absolutely accelerated to up over 172 million people using their platform each and every month. And if we take a look, their users are staying on their platform much longer than their competition. In 2019, the average user was on the platform for 80 minutes. And that has grown from back in 2018 back to 78 minutes per day. So you can see every time they log onto the platform, the average daily time spent has been growing. And that time is much larger than their competition. The average time spent on TikTok is 41 minutes, Facebook 45, Twitter 29, Snapchat 27. So you can see this company is really retaining customers very nicely. Average of 80 minutes spent per day on their platform in 2019. And one thing they're doing is they're targeting the younger generation. They're focused on the Gen Z population, which is really the first generation of people who grew up with full technology at their fingertips. And that market is absolutely massive within China. In China alone, 24% of their population was born between 1990 and 2009, which goes into that Gen Z generation. And that makes up around 328 million people for their active market. And that just continues to expand year over year. And even the younger generations that were born after 2009, as they grow up, their entire lives will revolve around technology. And if Bilibili can continue to be a market leader focused on that younger generation, the sky's the limit for where this company and their share price will be over the next 3 to 5 years down the road. Another aspect of their business that is often underlooked is the fact that their platform doubles as a mobile gaming platform as well. And we all know that the mobile gaming, the video game sector, and the overall streaming sector has grown in immense popularity over 2020. And that sector of the market, that online digital video game streaming, is only expected to see high double-digit growth each and every year over the next decade. And that mobile gaming platform accounted for 50% of their Q1 revenue this year. So they generated 50% of their revenue from their mobile gaming platform, which is often underlooked because this company is only really known for being the YouTube of China, which is more related to the video and content creation entertainment aspect of the business. But their mobile and video game platform made up around 50% of their Q1 revenue and has a strong future growth outlook as well. And the other 50% of their revenue came from the more traditional entertainment platform, ways of generating income, such as advertisements and sales from different Bilibili shops. And this company has some of the largest tech conglomerates, not only within China, but within the entire world as some of their key investors. The first one is Tencent. Back in 2018, the company purchased around 12.3% of Bilibili. So a significant portion from one of the largest tech companies, of course based within China, but with operations that expand globally. The second major acquisition was by Alibaba. They purchased an 8% stake in Bilibili. And Alibaba is one of the largest e-commerce platforms in the world, one of the largest companies overall with regard to market cap, and they continue to expand at a massive rate. And one of the downsides to Bilibili right now is their lack of full monetization. But this new partnership with Alibaba is really going to help change that. So Alibaba is hoping to use Bilibili's audience in that younger generation that they maintain each and every month to help connect them with Alibaba, one of the largest e-commerce platforms in the world. And overall, I think this is mutually beneficial for both companies. Of course, it's only an 8% stake, but that's still significant for a company that's worth over 25 billion, such as Bilibili. And I think Alibaba wouldn't have bought in such a significant portion, and they purchased over 24 million shares of Bilibili if they didn't believe that this company's future was bright. They wouldn't invest this much money into a brand that didn't have a strong future outlook. So this reassures my point that I think over the next few years, Bilibili is a stock that we may see go 2-3x over the short term as well. And the final big tech company that bought in was Sony. They have just launched the PS5 that is absolutely huge market demand. It is sold out across the nation, and this company is going to see huge top-line revenue boosts over the next few quarters. And one thing with Sony is they didn't buy 1 or 2%. They bought in at just under 5% of Bilibili. So another massive tech company operates within the video game sector of the market that is really going to help bolster up Bilibili's future earnings potential down the road. So some of the largest backers in the world have entered into the investment platform of Bilibili, and I think it really shows the confidence from some major tech brands within China and internationally that there is a strong future for this company, and we may see that reflected in the share price. Another thing I want to mention is that they are also partnered with Tesla. So we all know Tesla has their infotainment system within the dashboard of all their vehicles. And Bilibili is a partner, and their platform is available to consume entertainment while sitting in a Tesla vehicle. So another aspect of their business, which just shows this company is working with some of the largest brands within China just to get their platform out there to as many eyes as possible. So now that we've taken a look at some of the reasons why Bilibili is expected to grow, we're actually going to deep dive into the numbers now. We're going to take a look at some analyst future growth expectations, and we're also going to take a look at their financial statements to see how they've been performing over the past few years. Moving forward into 2021, analysts are expecting 45% sales growth for the next calendar year. And you can see in the current year of 2020, they were expecting 86% growth, and now continuous massive double-digit growth expectations for this next calendar year. And with regard to earnings, the average forecasted annual earnings growth is at over 70%, which is absolutely incredible. So right now, the company is posting net losses, but you can see over the next 3 years, they expect the company to hit break-even point and eventually become profitable down the road. So over about 3 to 4 year timeline, we're expecting this company that is still posting some heavy net losses to turn that around and post some positive net income numbers down into the future. Now we're going to look at Bilibili's previous 4 earnings reports and what's expected for the future. So earnings reports can really lead to some volatility in a share price. An earnings beat may send shares flying up even higher, and even a strong quarter but a slight miss on revenue and earnings can send shares toppling downwards. Over the previous 4 quarters, we have mixed results from Bilibili. We have 2 slight beats and 2 misses. But into the future, analysts are expecting some massive future growth. Q4 of 2020, we're expecting 115% year-over-year growth, followed by 39%, 33%, and 46% year-over-year growth over the next 4 quarters into the future. So absolutely massive growth expectations for Bilibili and their future earnings per share, or their future net loss per share, because you can see all of these companies and all these quarters are negative. If we take a look though at their income statement, like a young growing tech stock, top-line revenue has been expanding at a massive rate. Back in 2016, they only had 75 million of total revenue. Fast forward to today, in the past 12 months, they've generated close to 1.5 billion of total revenue for the business. And massive exponential total revenue growth you can see here from the chart. But if we take a look at their bottom line, net income still posting massive losses. $378 million net loss over the past 12 months. And you can see that net loss is actually growing each and every year, which is a slight red flag. But of course, with a young growth company, that is to be expected. And we're going to take a look at their balance sheet to go over why that actual net loss can be sustainable over the next few years. So right now, they have around just over $2 billion of cash on the balance sheet. And if we take a look, their total current assets sits at around $2.5 billion. So if we compare that to their total current liabilities coming in at $1 billion, they have a current ratio at around 2.5. So over the short term, there's absolutely no worry with regard to their ability to pay off their short-term debt. But another strong sign for their business is that their current assets of $2.5 billion are also higher than the total liabilities on the balance sheet. So they can pay off all of the debt for the entire business just using their current assets. All the cash on hand of over $2 billion comes close to paying off all the debt they have entirely on the business. And you can see they just started issuing long-term debt, which is very strong because a lot of young tech companies have the problem of before they are really generating any revenue, they issue a ton of debt to fund the business. But Bilibili didn't do that. Not until 2019 did they start taking on some long-term debt when they already had some major backers and they already had decent revenues coming in. So I like the balance sheet. I have no worries with it right now over the short term. This year for sure, over the next 12 months, their current ratio sits at 2.5. And right now, their total current assets can pay off all of their total liabilities in total for this business. So really, I have no worry about the short-term financial position of this company. Of course, they're really only generating cash from issuing and selling out shares. But when their share price is climbing and they can sell higher shares, of course that does dilute ownership in current shareholders. They're generating some decent money coming in from the issuance of those shares. And a good sign is that total equity is growing. What we want to see from a growing company is this total shareholder equity section growing year over year. And even for this young Bilibili, that is happening. 1.2 billion of total equity on the balance sheet. And if you take a look, back in 2016, 221 million, and consistently year over year, they've been growing it, which is a great thing to see. So their short-term financial position is strong. Their medium position, I'm going to say, is strong as well. The longer term, we have to get more information. They're going to have to start being cash flow fully positive before we can start saying anything like that. But right now, I think this company has a very strong short-term position. I'm not worried about bankruptcy, especially after going over the major backers of this business. I think Bilibili has a strong future. They're growing their monthly active users. The pandemic and the stay-at-home orders have really only accelerated their growth. And this is a brand with a strong future outlook. When you have companies and some of the major tech firms owning a significant stake of a smaller business that still only has a market cap at 25 billion right now, that is estimated to be as large as a company like YouTube, I think there's a lot of future growth potential. I think this company can continue to expand, and this is the hot stock we discussed in today's video. Of course, I am not any type of financial advisor. I'm just a YouTuber going over different companies. We took a look at some future stats. Always do your own research before you buy in. Thank you for watching. I'm the Gen Z Investor, and see you in tomorrow's video.